to another episode. I think this is episode 11 of the Sideways Rain podcast. Happy to be back here. I'm your host, Chris.
And I'm JR. Today I have the dog at the office. Kima is making her first Sideways Rain appearance. She's sleeping in the back. For those just listening in your car, you're going to miss out, so maybe check out the video. But today we're diving into a part of the business that most of us either avoid or wrestle with: finance. This isn't the shiny pitch deck kind of episode. It's the real gritty day-to-day stuff. We're talking bank loans, capital, credit, keeping the lights on, that kind of sideways rain.
And today we have a special guest that's going to be able to speak to all of those things from the other side. We have a small business loan officer that is going to be joining us and diving into all of those topics. But before we spill the beans and tell you who that is, we got to play that intro. Here comes the rain. Welcome back, everyone. Well, first and foremost, I want to take the time to introduce our guest of the day, Mr. Darryl Appiah. Darryl is a small business loan officer who has been in the industry for 10 plus years and has a ton of expertise. But without me giving away all of the good details, Darryl, please introduce yourself and say hi to the people.
What's going on, everybody? Thanks, JR. Thanks, Chris, for having me. I'm happy to be here. Happy to see if I could drop some gems. And yeah, ready to get this discussion going. So, yeah.
Awesome. I feel like we've been trying to plan this one for a while now, and just between schedules and dealing with work and day to day, it's taken us some time. But I'm glad we finally got the time to sit down and kind of dive into this topic. It's a topic that I'm personally very interested in, as I love finance and I love money. I'm sure we all do. So before we dive into things, Darryl, can you just tell us a little bit about how you got into the industry and kind of how you found that this was a fit and something that you wanted to do as a career?
Yeah, certainly. So prior to working for this organization, I'm working here for, I think, going on 3 years now. Prior to that, I was in the banking industry, did everything there was to do in banking, from part-time teller, climbed myself all the way up to management. And my last role there was a commercial portfolio manager. I think I've always had a business acumen, being surrounded by a whole bunch of people who always started businesses, a lot of entrepreneurs in my circle, and something I've always wanted to do. Chris, as you know, I actually had a clothing line not too long ago. Well, I want to say around 2012, all the way up to I probably stopped doing it about 3 years ago. And that was doing pretty well for itself. And then, kind of put it on the back burner to really focus and prioritize my career. But yeah, just wanted to, again, just being surrounded by, the finance, and kind of wanted to know what the ins and outs of it were. And I think my first intro into real commercial lending was when COVID happened, when my bank kind of had a little task force and, they launched PPP, and it was a real fire drill. Nobody really knew what to do. And, I was working with a lot of close clients that I had at the bank, trying to, get funds before they ran out, things of that nature. And then ultimately it was like, okay, that was my first foot in the door of actual, real commercial lending. From then on, I started kind of doing my own due diligence, looking up things via the, SBA website, asking some of my colleagues who are already commercial lending, and ultimately was decided, this is something I figured I could be good at, as long as I, was shown the ropes, and here we are.
Yeah. So Darryl, a lot of people approach the finance industry as a transactional route. I need a thing, you have the thing I need, and I'm going to come to you to get it. But you come at this with a little bit of heart, a little bit more feeling. Was there a moment this all clicked for you, that it was about people and not money?
Well, I mean, it just kind of goes down to who I am as a person to begin with. I always, I've always believed if you do something without expecting anything in return, that karma is going to come back, to you full force. So it's like, okay, well, I already like businesses. I've been working around money. I like money, like you said, who doesn't, and then I get paid for it. It's just a bonus, right? So I think probably one of my first clients when I started working here, and after kind of walking her through the process from start to the finish line, and then how grateful and thankful she was once we finally awarded her the funding, was like an aha moment. It was like, oh wow, she was just, again, she reached out to me a couple more times after that. And it was just, it wasn't so much like it was a fulfillment for me knowing that I was able to kind of get somebody's dream started, their vision come full circle. So, for me, it's just, that's what it's all about at the end of the day, and even if it's something I can assist with, I'll look within my network to see if I know anybody that can. So again, it's all about trying to help whoever needs it at the time.
Most definitely. And I remember my days back in the banking days. We're not going to go and tell what year that was, but I have a little bit of experience in that banking industry as well. And seeing the outcome of your efforts and how happy it makes the people on the other side, and seeing the impact that you're providing during this time is very rewarding, to Darryl's point. So I can resonate exactly with what you're saying, and kind of having that aha moment when you speak with these people, and you're helping them with their finances, which is a very sensitive topic, but getting them to that finish line. And then when they do get that funding, seeing what can blossom from that is truly a testament to not only your customer service, but also helping that person in your community and pave the way forward. So definitely understand where you're coming from there, Darryl. But with that being said, you mentioned this person that you serviced, it was their first time. They didn't have any experience going through something like this. Can you walk us through what are some of the barriers for some people that are in that position today, or for some of those people that don't know how to get started? What are some of the barriers that you commonly see when you're dealing with first-time entrepreneurs that are looking for small funding?
Right. So, I guess really, so I'm a generalize, and maybe I can kind of go into how my company differentiates from traditional lending in a sense, because I think, my role in my company is we're set up, we're alternative lenders in a sense of we're a lot more lenient than traditional lenders. But we can touch base on that in a little bit. But really, just speaking from experience, a lot of things that I see in terms of preparation is, just everyone has their idea, but actually being able to properly articulate it in a way that it makes sense to others, I see seems to be the challenge. It's like I have a great idea, and then when I'm trying to relate it to you, it might not make sense. And then obviously that kind of translates into the nitty gritty in terms of business plans and projections, and financials is key. I mean, back when I owned a business, or ran a business, my clothing, I wish I knew what I do now back then. I was just kind of recycling my dollars. I printed the shirts, I sold them, kind of held on to some of those funds. I just rolled it back in there, but I didn't track where any of my funds went. I never had a profit and loss statement. I never had a balance sheet, and those things are important. So a lot of these people that I talk to in these early stages, and I'm asking for financials, they're scratching their head and they're like, what? I mean, bookkeeping is so important, and I see a lack thereof. Or also, even if they're past that stage, and when it comes to the financial portion and they're seeking lending, and when filing their taxes, they write off everything. I know why they're doing it. It's great that they are. Obviously, you want to mitigate the tax liabilities, but it's terrible when you're looking for lending, because now you have nothing on the bottom line. So, that's what lenders want to see, that your business is growing. It's not cash draining, or that we want it to see that it's cash flowing. And then if you've written everything off, it's not going to appear that way, because at the end of the day, it's about what's on paper. It's, a lot of it's about what's being documented for lenders, really. And that's the way they kind of cross their T's and dot their I's, because lending is all about risk management, as you guys probably both already know. So, if we're being shown a document and it's showing negatives, it's not gonna, okay, it's like, what are you telling us about your business that would allow us to be comfortable lending you an X amount of dollars? You see what I'm saying? So that's a big no whenever seeking funding, if you're seeking funding. But again, if you're not in a position to do so, and you want to continue to do that, there's nothing wrong with it. But when you're trying to get funds, it doesn't quite work out that way. So all in all, I will say the biggest thing is I would like for more people to really understand how important it is to have their ducks in a row in terms of the personal investment they made in themselves. Really, just don't wake up one day and say, hey, I have an idea, I want to monetize it. But you really do your research. I mean, the internet, there's so many. You can reach out to me, reach out to anybody that you think might be able to kind of, put you on game a little bit. But just take the time out, do your due diligence to kind of put everything together before, really pursuing something. Because at the end of the day, we don't want nobody to be in and over their head. That's what it kind of all boils down to. So you do that by taking the time out to really decide if this is something you want to do first and foremost. And secondly, just you're more prepared that way. As you guys both know, small businesses are likely to fail. It's just it is what it is. But you can prevent that by putting that work in the beginning instead of just kind of taking that leap of faith. Just make sure you put the time in.
Yeah, on that note, talking about small businesses leading to failure, I think 1 in 10 survive. 1 in 10 of those make $1 million. 1 in 10 of those make 10 million. It's a high risk game. Yeah. But you said you're a little bit more lenient than other lenders. How are you able to do that, and how are you measuring the human success to be able to do that?
Yeah, so for my organization, one thing that sets us apart, I'm just going to touch a few of the highlights. So we our bread and butter is startup businesses. As you know, most banks like have revenue requirements and won't even allow you through the door unless you've seen that you've been generating some sort of income. So it's usually hard for entrepreneurs who have these ideas, who need that boost, that funding to get to the next level when they're not even given the chance. So my company, we're able to do loans based off solid projections, and a good business plan, as long as there's a good amount of secondary income and the client isn't over leveraged in debt, because it goes back to me saying that we don't ever want to put a borrower in a bind. So yeah, so that's one thing that sets us apart. We don't have like a FICO credit minimum score to work with us. For us, I will say we take into account the story, the why. Now, we will examine your credit. So it's not to say that it's a free for all, but I'm paying attention to stuff like late payments, any negative remarks. If you've been bankrupt, it's not the end all be all. It just can't be within the 3 years of your loan request. So things of that nature, because we get that life happens, whether it be COVID related, medically related, or you just had to take time off we get that life happens. So those are some of the things that we take into account. We do require a 5% injection into, if you're a startup, we require 5% injection, meaning it's a 5% down payment and then we fund the rest. However, we offer flexibility in a sense of, if you can show any recent monies or investments within a certain time frame of your loan request, we can mitigate that 5% down and use that in place of the startup injection, so you won't have to come out of pocket anything. Another thing for us too, we like to see that a little bit of reserves. Due to the economic climate a little bit, it's we want to see that in case of emergency or things happen, that then they want to know that in addition to paying your own personal living expenses, you can pay back our loan, because it is a loan at the end of the day. So we mitigate that by say, they have some cash reserves, they have some money in the bank that in a rainy day, no pun intended, that they'll be okay, and nothing, they're not going to be underwater trying to service their mortgage if they have it, their rent if they have it, car note, etc. in addition to our loan. So those are kind of the things that set us apart, in terms of what we offer to clients.
Awesome. And you touched on kind of coming into this as a first timer and what the process is like. Are you able to kind of give us an overview or a walkthrough of that first time entrepreneur that says, hey, I have an idea, I think I will qualify for the funding that I need, and I'm knocking on Darryl's door? What does that process look like from start to finish on your side?
In terms of so I can answer this in two ways. So it's really dependent on them. It goes back to me saying, how much work have they put in? So Chris, in your example, are you saying if it's somebody who just has an idea and just truly doesn't know where to begin, or they've already kind of, put the pieces in place?
They've kind of already put the pieces in place. They've kind of validated their idea already. They know what they need the funding for. They have potential outside interest that's not official yet, but maybe they have something in writing. Right. That type of first timer who's done that. They know their market. They've done their research, so on and so forth.
A solid business plan. Number one, obviously, one that has a good marketing strategy, executive summary in their bio, and just really kind of, and it doesn't have to be extensive. A lot of people think business plans have to be like a 20 slide PowerPoint or 50 pages. No, it just has to hit all those concise points that we need, and it makes sense to us so that we truly understand your business. That way, if I'm looking at a business plan and I don't have to go back and ask you that many questions, that means you have a really good business plan. I might ask for some clarification here and there, but that there would be key. Projections also. For us, we like to see projections that are ramping up. We don't like to see flat projections. We want to see that there's growth. We typically ask for 2 years, broken down monthly, 24 months. So solid projections, business plan. And then there's also resource centers all over. I don't know if you guys are familiar with small business development centers. They have them nationwide. They typically work in conjunction with universities. So, I mean, even there, they have advisors that can walk you through those processes if you're feeling a little shaky about what you already do have. And then us ourselves, we do offer a business advising as well. But really, yeah, projections, a solid business plan. I always recommend, obviously. So, for example, let's say you're working, because I have seen this where, they're so hung up in wanting to pursue their dream that they just kind of leave everything behind and go full ahead. But it's like, hold on, let's pump our brakes a little bit. I always, you can do both simultaneously. You're just gonna have to put in that extra work when you get off your 9 to 5 and invest in your own dreams. So, I will say keep your job, and as your business is ramping up, you're still generating that income. Because again, it goes back to me saying you don't know. You just don't know if it's going to be successful or not. So continue to work, kind of ramp up your business on the side, allow it to grow. Hopefully it's something that you can do both, simultaneously while you're working, and then you can still work on your dream or your business outside of that. So I think those are really the most important things in terms of not even just with us, the seeking funding or growth in your business is kind of those 3 things. Obviously keep the income going, and make sure you're in a place where you can, take that leap of faith. I can't stress this enough. Just really do your due diligence before just going in blindly thinking it's going to work. You have to put the work in. Rome wasn't built overnight. So you really gotta, especially if it's something that you want, it should come easy for you. So yeah, that's kind of the first things that come to mind in terms of what needs to be done and getting closer to your dreams.
What about the other side of that spectrum, the entrepreneur that is a deer in the headlights when you say P&L, balance sheet, or statement of cash flows, but they have a great idea? How do you coach them across the finish line?
Yeah, and I always gotta catch myself, because every now and then I'm so ingrained to speak in lender talk, and after time I'm throwing out these acronyms and talking numbers, and they're looking at me like a deer in the headlights on the board. Really, it's just educating, and that's the thing. There's not enough of that portion of it, because that's important. I think if you're going to be a business owner, you do kind of need to know those things. I mean, there's really is no way around it. If you're going to be a successful business owner, you should know those things. So if you don't, again, it goes back to me saying that's part of putting that time in, that investing, that self preparation. It all goes hand in hand. You can't just you gotta know those things. There kind of is no way around it. But I will say, if it's something you truly want, all that will come. It might take until talking to somebody like me, and that's probably when it actually clicks. A lot of those people don't hear those terms until they talk to somebody in the finance realm, and then they're like, So maybe it takes having that conversation with somebody already in that realm, that field, that will kind of, because you only know what you know, because like you said, how are you gonna know to put together a P&L or to actually use QuickBooks if you don't talk? Then you're not gonna know you need it. You think it's easy. You want to start a restaurant, you're thinking, why am I gonna, why do I need to keep track of my numbers? If you don't have the time, hire somebody who does. Let them do it for you. And that's part of the investment aspect of it. Accounting, all those things. It's a numbers game at the end of the day. Especially when seeking lending, it's all about what's on that paper, because we can only take your word for so much. You see what I'm saying? You can tell me your business is doing great. You gotta see your tax returns. And, you'll generate it. Math ain't mathing. So those are kind of the conversations I like to have with clients. And I'm glad I actually enjoy kind of educating those who don't know about it, because again, it's important, and you can't run a successful business without knowing those things.
For sure. And to your point, I think JR and I can attest to that as well. Like, we learn so much in being in real live situations. And there are times where we find ourselves in situations where we're actually learning while we're speaking to the person that we were able to get that meeting with or getting on that call with. So with that being said, when you are dealing with these first timers, when maybe they're not so well versed in seeking funding for their business or their idea, what are some of the like misconceptions that I'm sure you hear all of the time when you're dealing with these less educated or less well-versed people in this space? What are some of those misconceptions that you hear that just are not true when it comes to sourcing funding in this realm?
Um, for me, I'm gonna get a little bit specific because of again it, and this might not apply to all institutions, but because of how flexible we are, once I'm having a conversation with them, like for example, I'll do a lot of outreach events where I go to, small business, like small business focal like events where I'll kind of give information about what I do and what my organization does. And then it's not until I have a conversation with them where they don't think they have a shot, but it goes back to me saying things like, oh, because a lot of, they see a bankruptcy, they just automatically assume they don't have a chance. And it's like, no, it's worth a conversation. Or they haven't started generating revenue. No, it's worth the conversation. Or, they just started a new job or they just bought a new house, things of that nature. So again, it goes back to how flexible we are. I will say maybe a general misconception is thinking they don't, maybe the lack of like the time management portion of it, and just trying to balance both.
Mm.
Think, oh, or thinking they have to leave one job in order to do the other. Not really specific to the lending part of it, but just thinking that I've heard a lot of people have all these ideas, and maybe it's just fear. Really, it's just that fear. And then, but no, I mean for us, and as flexible as we are, I mean it's always worth the conversation. One of our mantras is if when they say no, we might be able to say yes. So I mean, I usually lead by there's no credit score minimum to talk to us, but a lot of people think, oh, I have a 610. I don't think I have a shot. No, so let's have a conversation. We'll see we can make it work. So those are kind of the things. I'm not sure if that kind of answers your question, but those are kind of things that come to mind at first when hearing that.
Yeah, you're talking about a lot of stuff other than the hard numbers. So there's a lot of intangibles that go into small business. Obviously, having clean books and being able to read them and having a solid business plan is good. But the other half of the equation, well, there's a couple of things. There's the business idea. Is it viable? Is it real? Is it workable? How much competition's in the marketplace? But is that human being motivated enough to get it across the line? And how do you measure that is incredibly hard and intangible. So tell us a little bit about the work that CDC and Momentus Capital are doing. How are you redefining lending and how that can look?
Yeah, again, it just goes back to kind of being that alternative lending option. And not only do we do small businesses, so CDC Small Business Finance is part of the Momentus Capital family, where we also do community development lending. So we work with a lot of real estate developers. We also do 504 lending. So we have our hands in many buckets. So as mission-based lenders, we just kind of want to just assist wherever we can. And just offer the opportunity to just be a resource in a sense. Again, if we might not be able to help everybody, but we just want to be an option in that sense. So we are nationwide. I have colleagues all over, California, Texas, Detroit. And I'm out here in the DMV market. We're looking to kind of grow in Georgia, Atlanta specifically. So, I mean, it's just really just trying to get in front of as many folks as we can to say, hey, we are a resource. We have another initiative where we're trying to work with franchises, especially with the climate of the economic state. A lot of government workers who are transitioning out, who are kind of thinking about what's next, or maybe trying to seek that, that cookie cutter business model that they've always wanted to do with franchising, and maybe might need that lending assistance to get there, whether it be to pay the franchise fees, etc. So those are kind of the things that we're covering. We're not really leaving any stone unturned and just seeing where we could be a resource to those who need it.
That's awesome.
Yeah, no, I love it. And the thing that I like about what you guys are doing the most is you're open to educating. You're not expecting these people to come here with all of their ducks in a row and know exactly what you're going to ask for and be all buttoned up. If you don't know, you're still asking those people, let's have a conversation. Let's sit down and let's talk about your idea and your journey and what that looks like and how we can help. And I think as a first-time entrepreneur, that's very encouraging, and it's very warming to know that someone that holds the money is willing to kind of talk you through the steps of potentially obtaining that money.
Right.
And that is huge. And I applaud you and your team for doing that, because to your point, I think a lot of this is just lack of education sometimes, and the lack of not knowing, and being able to sit down person to person, face to face. I feel like it really does a lot for the community, and it just empowers others that much more. So kudos to you guys for doing that.
And in addition to, we kind of we pride ourselves on making connections with other institutions, whether it be banks and those SBDCs that I mentioned earlier. And typically how it works is they have that conversation that you just kind of described. They have those conversations, and that's when they kind of roll me into the loop. So, I'm grateful for the partners that I do have who do take the time out to work with clients on their business plans and their projections. And then, hey, okay, you're ready for funding. We're grateful for the partners that we have that get them lender ready. It's one thing to be business savvy and business ready, but it's another thing to be lender ready. So we kind of, commingle, or at least me, I do my best to try to commingle the two in terms of getting them the most prepared so we can get them the funding they need as soon as possible so they can grow as soon as possible. So
Awesome.
There's a lot of entrepreneurs out there. Hopefully they're listening to this. They're in the sideways rain. They're bootstrapping. They're scraping. They're working after hours. They're working until 2-3 in the morning. But they get stuck, right? So maybe they got to a point where they got to MVP, or they've built a thing and they need to take the next step. They're almost there. What do they need to hear from you?
Keep going, man. I mean, in terms of, it can look a couple of ways in terms of being almost there. It's like, if you just need a little bit more capital to get to that next level, to make that next hair care product, to make that next item of clothing, then we can have that conversation in terms of what needs to be done in order to get the lender to do so. If they just need a little bit more motivation, I mean, I'm happy to give that pep talk too. But it's just keep going. I mean, it's in you for a reason. If it's something that you really, really want to do, I mean, look at you guys. You guys are out here killing it. You're a perfect example of that. And then I've always encouraged people to start something of their own, man. To just treat it, it's your baby, and that fulfillment you get watching it grow. I mean, I ain't got no kids, but I feel like that might be pretty close. See it off. So, really, it's really kind of finding out where they are in their business journey and how I can be a resource to them. Again, even if it's something I can't do, I'm gonna do my best to see if I know somebody that can do it to get you where you need to be. So,
awesome.
At the end of the day, it's all about helping.
That's amazing. All right, well, we're gonna shift things a little bit. We're gonna have a little bit of fun. We're gonna put Darryl on the hot seat, and we're gonna do a lightning round. Just a few questions, nothing crazy. So, Darryl, are you ready?
Yes, sir.
All right. So, question number 1: what is a misstep when it comes to small business funding that you typically see, or you often see? One misstep.
A misstep that the client kind of does to.
Correct.
Leaving out pertinent information that is contingent on us funding them. Let me see if I can that.
I could imagine that one.
Yeah, like why are you just now telling, like, if leaving, so you all familiar with business debt schedules? Basically, you just list out all your business loans or notes, credit cards. So example of that, I had a client, we're getting ready to fund them, and I think underwriting too. So really, my role as a loan officer is I kind of work as an advocate or the middleman between the borrower, the entrepreneur, and then I connect them to our relationship manager. The deal goes in underwriting, then it turns around and gets funded. So I do all the dirty work, kind of find out what's going on, collect the documents, crunch numbers, spread the deal and say, okay, they're okay to service this additional debt. Once that's done, I'll make the intro to our RM. They take it from there. I only can give them what they give me. So they do almost like another credit run once it gets in underwriting. And they might see something that, because I only do the preliminary pull, and they might see something that I didn't see. So then turns out, oh, well, you have another $80,000 equipment loan that wasn't on your debt schedule, and now you don't cash flow anymore because So now we're almost at the finish line, and there's a debt that you didn't account for, and now we don't know if you can take on another. You see what I'm saying? $100,000. So
Yeah.
that's a misstep I've seen.
It's like, oh, I forgot about that one.
Yeah, nah, you can't. We're gonna find out. You can't leave nothing out.
Okay. So honesty is key, and making sure that you have all that stuff spelled out so that you're getting an accurate quote on what you qualify for. That makes sense.
Exactly.
Okay, so next question. What is one underrated move that founders and entrepreneurs should make early on?
I would say a good business owner, and obviously it's contingent on business, should have three things, and that's a good bookkeeper, a good or solid accountant, and an insurance agent. There was another acronym that one of my partners just told me about, and I loved it, but I can't remember it off the top of my head, but it's something along those lines. So I will say investing in those early on probably make your life a whole lot easier, especially if your whatever service you're providing, it consumes a lot of your time. You don't have time to sit there and go on QuickBooks. Well, QuickBooks is all plug and play anyway. But let's say you're a hairdresser or hair salon, and obviously you're standing up you're on your feet all day, and and then the last thing you're probably going to do is get in front of a screen and look at numbers and crunch it. I mean, but it's necessary, as I alluded to earlier. So I would say investing in those things will make your life easier, in terms of just keeping track of your dollars and your finances, and being able to communicate that to people like me whenever you're seeking additional funding to grow.
Love that. And would you say it's pretty common, or do you see it often, where entrepreneurs or business owners are coming to you without that bookkeeping in place, and it
Scary.
and like, what is that conversation like? Like, obviously, I know you're putting them on game and telling them about QuickBooks and things like that, but what does that encounter look like when it's like, oh, I don't even have that stuff mapped out yet?
Well, you better go get it. It's like, nah. Kind of similar to how I'm related to you guys. Really, it's like I just kind of stress the importance of doing so, because I remember talking to one client, and they were actually they weren't even a startup. They were existing. They had been operating for maybe, it was still early stage. I want to say a year, some change. But then I'm asking them, about revenue, and they're just like, oh well, we don't take cash as part only. I could send you those Square reports that just kind of show how much transactions are, but we can't do nothing with that. It doesn't show us the expenses. It doesn't show us, the costs in between it just, it was a mess, in short. So, and I do a little bit of education and guidance, and I actually even connected them with the bookkeeper to mitigate that and maybe help them along going further. It's, I don't scold them or anything. Obviously I might hold them down and be like, oh my God, another one IRA. It's okay. Let's go. Let's because again, like you said, you only know so much, and then your job or whatever the service you're providing, you might not think it's a priority. But no, again, it's just kind of how I'm relating it now. I just kind of let them know or stress the importance of it, and maybe connect them with somebody who can do better explaining it than I can. Someone who could actually have the time to be more hands-on with them if I don't, have it for whatever reason. I've even worked with the client on projections from start to finish before. Now I don't do that often. That's not part of my role. So for those out there, don't come running to me with your projections. I will help you where I can, where we expect you to have that before coming to us. And then if not, again, obviously we'll offer the guidance as I mentioned earlier. But it's typically, unfortunately it is common, but it's not the end of the world. It always gets done. Whether I refer them to someone else or it might need a little bit of polishing, things of that nature.
Most definitely. Paper trail is key for those that are listening. Make sure you document everything, whether it's revenue, expenses, losses, things of that nature.
Oh,
if you're looking for funding.
Split your, I see a lot of commingled funds with business and personal. They're running it through one bank account. Separate the two, please. Keep it separate. It makes your life easier. It makes whoever's looking at his life easier as well. So I've fortunately I've seen that, one too many times where they're just starting up and it's like, oh well, I made this purchase here, and I'm like, they're having to go through statements and show me that they bought this couch for their office. But then I'm looking and I see Burger King and Chick-fil-A too. And I'm just like, come on, man, let's clean this up a little bit.
Sure.
For sure. For sure.
Organize.
All right. Well, last question of the lightning round. What is one financial tool or tip that you wish founders and entrepreneurs knew about prior to coming and seeing you?
You're talking about clients in like a startup phase, right?
Yeah.
Yeah. I think again, I'm gonna repeat this. I'm sorry if I apologize if I sound repetitive. Just don't write everything off. A lot of people think that's if you're seeking funding. If you're looking for a loan, don't show a lender a tax return, with the negative. Now again, so let's say, okay, well, let me take a few steps back here. So that instance we see that more in existing businesses, not so much startups. Startups will see like maybe one file tax return with everything written off. If it's a existing business, because we usually ask for 3 returns, 2 to 3, so that way we can see historical trends. So if one year looks really good, and then you have 1 year that looks really bad, and then you have another year that looks really good, we're going to ask what happened in that year that it looked bad.
Mm-hmm.
So just because it's negative doesn't always mean it was everything written off. I'm going to look for add backs, or add backs meaning interest appreciation, anything I can add back to help that cash flow. Sorry if I'm getting into my lender bag again, where I got to remember everybody knows what I'm talking about when I say things. But yeah, I think that's the biggest tip if you're a startup. Another one, yeah, and I hate to sound repetitive. Really, I think it's just really taking that time out to research, really do your due diligence. I don't know, I can't stress that enough. Study your market, understand your market. I mean, there's no such thing as a brand new invention. You don't recreate the wheel, you just reinvent it. So you find your niche and then you tweak it. You make it your own. So in order to do so, you got to understand your competition. Understand your demographic, things of that nature. Because a lot of people just really wing it. You'd be shocked. The food industry is one. You see a food truck or a restaurant popping up in every corner. But they have a similar one not too far. What sets you apart from that guy down the block? You see what I'm saying? So those are the things that I like to highlight and can't stress enough for those who are still kind of trying to figure it out, or in that really, really, really early stage where they're still playing with a lot of ideas.
That's awesome. Darryl, this has been great. I came into this conversation not really knowing where it was going to go. I thought we were going to be talking numbers and reports. And I was surprised how much we talk about humans in this. And that's refreshing, actually. And the soft skills you have to make that connection between lenders and borrowers is incredibly important. And I think continue breaking down those barriers, because we all have this Hollywood vision of a bank where you walk in and there's marble floors and there's a person behind a desk and they're straight faced and they're just measuring you based on your numbers. That's not the case all the time. Sometimes they're coming in and they're helping you across the finish line. They're measuring you as a human and an entrepreneur. That's so refreshing to hear that companies like yours are doing that. So thank you so much for the work that you're doing, helping people move through the storm of entrepreneurship, and being a guide in that is just so huge for young entrepreneurs that need to learn. So really appreciate it, and appreciate your insight on the episode.
Certainly. Thanks for having me.
Most definitely. And Darryl, where can our listeners reach out to you, learn a little bit more about what CDC and Momentus Capital are doing? Maybe you guys have any local events that are coming up on the calendar. Tell the people where they can find you.
I think our website is just cdc.com. Look up, guys. Make sure I'm putting it right. You can just reach me on my email, Appiah @cdcloans.com. The website cdcloans.com is another place that you can find us. Momentus, if you Google Momentus Capital, you kind of see all that Momentus has to offer, not just small business. We're everywhere. We're the one of the top leading lenders in the community advantage loan. That's the loan product that I was basically talking about during this conversation. But again, and I think what really sets us apart is the fact that we do those entry-level businesses, those startup businesses that a lot of banks and other institutions won't look at. So, if you just Google us, we're there. I think my face is one of the first ones on the website too. So
Nice. Nice. Well, once again, we appreciate you coming on board. And to everyone out there listening, this is Darryl Appiah. Thank you, sir. We appreciate it.
Thank
you
you.
guys for having me.